Tuesday, April 14th, 2026. Like and subscribe. The $1 Investor, MSBT full breakdown. Today I want to talk about MSBT, the Morgan Stanley Bitcoin Trust. This is my 12th ETF and this is one of my newest positions. According to Morgan Stanley, this product launched on April 7th, 2026, and it is designed to track the performance of Bitcoin using the CoinDesk Bitcoin benchmark 4 p.m. New York settlement rate. Morgan Stanley's own launch materials say the sponsor fee is 0.14%, which they described as the lowest sponsor fee among Bitcoin exchange-traded products at launch. Morgan Stanley also says Coinbase Custody is the custodian and State Street is the administrator. That matters because this is not a normal stock ETF. This is not a basket of businesses making products, generating earnings, and paying dividends. This is a Bitcoin access vehicle. Morgan Stanley says directly that this product is an exchange-traded product designed to give investors exposure to Bitcoin, but it also warns that it carries a high degree of risk and heightened volatility, and that it is not suitable for any investor who cannot afford to lose the entire investment. That is the first thing people need to understand. The low fee does not make it low risk. The big name does not make it safe. This is still Bitcoin exposure. Now let me be honest about the 5-year question. MSBT itself does not have 5 years of history. It is brand new. It only came out a few days ago. So if I want to understand what this thing might do over the next 5 years, I have to look at the asset underneath it, and that asset is Bitcoin. That is the only honest way to do this breakdown. Morgan Stanley built the wrapper, but Bitcoin is still the engine. Over the last 5 years, Bitcoin has done what Bitcoin always does. It has gone through huge upside runs, brutal collapses, long stretches of fear, and then fresh waves of adoption. The reason funds like this even exist now is because Bitcoin crossed over from being a niche crypto asset into something Wall Street could no longer ignore. Reuters described the launch of US spot Bitcoin ETFs in January of 2024 as a watershed moment for the industry, with about $4.6 billion in trading on the first day and roughly $1.9 billion of inflows over the first 3 days. That is the world MSBT is stepping into. Morgan Stanley did not launch this thing into a vacuum. They launched it into an already established Bitcoin ETF market that proved there was real demand. That also explains what Wall Street thinks. Wall Street sees Bitcoin ETFs first as access products. The story is convenience. Traditional investors want Bitcoin exposure in a brokerage account without dealing with wallets, private keys, direct custody, or crypto exchanges. That is exactly how Morgan Stanley is presenting MSBT. Their advisor materials describe it as a way to gain exposure to Bitcoin through an exchange-traded product offered by a trusted firm with deep experience serving investors. In plain English, Morgan Stanley is trying to put its own brand on a piece of the Bitcoin ETF market by saying, if you want Bitcoin exposure, here is our version of the wrapper. So far, what do analysts think? Since MSBT is only days old, there is not some deep 5-year analyst record or long trail of ratings behind it. What exists right now is more product analysis than traditional analyst opinion. The early professional takeaway is pretty simple. Morgan Stanley entered the market late, but it came in with an aggressive fee and a trusted brand. ETF.com noted that MSBT was the most recent Morgan Stanley ETF launch and positioned it within the broader trend of big Wall Street firms moving deeper into the ETF business. Morgan Stanley's own launch materials emphasize the 0.14% fee as the key competitive hook. So early on, the story is not that this fund is changing Bitcoin itself. The story is that Morgan Stanley wants to compete on brand, distribution, and price. Now let me talk about what the market is saying through price and size. The current finance feed shows MSBT trading around $21.05. with intraday trading volume just under 885,968 shares at the latest reading. MarketWatch's early quote history shows that the fund began trading around the low $20 area and has already been moving with Bitcoin from day to day, exactly the way you would expect from a Bitcoin trust product. Because this fund is so new, price action right now matters more than long performance charts, because there are no long charts yet. Now let me bring it home to my own position, because that is what I do on this channel. According to my screenshot, I own 0.241372 shares. My market value is $5.20. My average cost is $20.71. My portfolio diversity here is 0.17%. My return for the day is positive $0.138 or positive 2.73%. My total return is positive $0.2016 or positive 4.03%, and my recurring investment is $1 every single day. That is how I'm treating this position from the start. Small, controlled, disciplined, and intentional. Now let's talk future, because that is really what people want to know. Over the next 5 years, I see 3 roads for MSBT. The first road is the bullish road. Bitcoin keeps gaining institutional acceptance, more advisors and clients want direct exposure through brokerage accounts, and Morgan Stanley uses its distribution network to push MSBT deeper into portfolios. In that world, the low fee helps, the brand helps, and the fact that it is coming from a household Wall Street name helps. If Bitcoin keeps climbing as an accepted asset class, then MSBT can grow right along with it. That is the best case. The second road is the middle road. Bitcoin stays relevant, but it keeps doing what it has always done. Massive rallies, ugly drawdowns, emotional investors, and wild volatility. In that world, MSBT survives and maybe even grows, but it stays exactly what it is now, a high-risk access product for people who can handle sharp swings. That means this is not something I would ever describe as safe. It is just a cleaner wrapper. The third road is the bearish road. Bitcoin loses momentum, regulation gets tougher, risk appetite dries up, and investors stop chasing the asset the way they have in recent years. If that happens, MSBT will suffer with it. There is no dividend here, no business earnings here, no internal operating engine here. This trust rises and falls with Bitcoin. That is the deal. Morgan Stanley itself says investors in MSBT face a high degree of risk and the possible loss of principal. That warning is not there by accident. So my bottom line is simple. MSBT is not special because it changes Bitcoin. It is special because Morgan Stanley finally put its name on a Bitcoin wrapper and came in aggressively on price. That is what Wall Street sees. That is what early product analysts see. This is a competitive entry into an already hot Bitcoin ETF market. If Bitcoin wins bigger adoption, MSBT can ride that wave. If Bitcoin struggles, this fund struggles. That is the truth. No sugarcoating. For me, this is not one of my conservative core positions. This is one of my higher risk positions. This is one of my swing for the fences positions. And I want to be clear, just like I was with the other crypto ETFs, I do not condone beginners blindly following me into these crypto ETF positions. I understand what I'm doing. I'm sizing this position small. I'm building it $1 at a time. I'm treating it like a calculated risk, not like a guaranteed path to wealth. Like and subscribe, the $1 Investor. Today I want to talk about MSBT, the Morgan Stanley Bitcoin Trust. This is my 12th ETF, and this is one of my newest positions. Morgan Stanley launched this fund on April 7th, 2026. So this thing is brand new. And right from the beginning, I want to be clear. This is not one of my conservative core funds. This is one of my higher risk positions. This is one of my swing for the fences positions. Now, what exactly is MSBT? It is a Bitcoin trust product from Morgan Stanley. Its job is simple. It is designed to track the price of Bitcoin. That is it. Not business earnings, not dividends, not cash flow, just Bitcoin. Morgan Stanley says it uses the CoinDesk Bitcoin benchmark 4 p.m. New York settlement rate as its benchmark. They also launched it with a sponsor fee of 0.14%, which they said was the lowest among Bitcoin exchange-traded products at launch. That tells me exactly how they are trying to compete. Low cost, big name, easy access. And that is really the whole point of this fund. Morgan Stanley is telling investors, if you want Bitcoin exposure, you can get it here in a regular brokerage account. No wallet, no private keys, no crypto exchange headaches, no direct custody problems. That is what Wall Street likes about products like this. Access. That is the real story. Now, because this fund just launched, it does not have a 5-year operating history. So if I want to understand where MSBT could go over the next 5 years, I have to look at Bitcoin itself. And Bitcoin's story over the last 5 years has been exactly what you would expect. Big rallies, big crashes, big fear, big greed, and then eventually big institutions stepping in. Bitcoin ETFs changed the game because they made Bitcoin easier for traditional investors to own. That is the environment MSBT is entering. Morgan Stanley is late to the party compared to some of the earlier spot Bitcoin ETFs, but they are coming in with one thing that always matters on Wall Street, a trusted name, and another thing that matters, a low fee. Now let me talk about what Wall Street thinks. Wall Street does not look at MSBT like a broad stock market ETF. Wall Street looks at this as a Bitcoin access product. The reason people care about this fund is not because Morgan Stanley invented something new. They care because Morgan Stanley put its name behind a Bitcoin trust and brought it into the brokerage world with a competitive fee. That matters. It matters because advisors, institutions, and regular investors recognize the name Morgan Stanley. Now, what do analysts think so far? Because this fund is only days old, the early view is more about structure and positioning than long-term performance. The early message is simple. Morgan Stanley entered the Bitcoin ETF market with an aggressive fee and a trusted brand. That is the pitch. Now let me bring it back to my own position. According to my screenshot, I own 0.241372 shares. My market value is $5.20. My average cost is $20.71. My portfolio diversity here is 0.17%. My return for the day is positive $0.138, or positive 2.73%. My total return is positive $0.2016, or positive 4.03%. And my recurring investment is $1 every single day. That is how I am starting this one. Small, controlled, disciplined. Now let's talk about the next 5 years. I see 3 roads. Road number 1 is the bullish road. Bitcoin keeps gaining acceptance. More advisors and institutions want exposure. Morgan Stanley uses its platform and distribution power to grow MSBT. If that happens, this fund could do very well. Road number 2 is the middle road. Bitcoin stays relevant but keeps moving in brutal cycles. Up hard, up again, down again. In that world, MSBT still works for people with patience, but only if they can handle the volatility. Road number 3 is the bearish road. Bitcoin loses momentum, regulation gets tighter, risk appetite fades, and this fund falls hard along with Bitcoin. That is the reality. This thing does not have a dividend. It does not have earnings. It does not have a business model underneath it. This is a Bitcoin wrapper, nothing more, nothing less. So my conclusion is simple. MSBT is Morgan Stanley's way of stepping into the Bitcoin ETF market with a low-cost product and a powerful brand name. Wall Street respects the access. Analysts respect the pricing move. But none of that changes the risk. This is still Bitcoin. And because this is still Bitcoin, this is still one of my higher risk positions. A calculated risk, a controlled risk, not a blind gamble. And I want to be very clear. I do not recommend that beginners chase these crypto ETFs without understanding what they are buying. For me, this works because I build slowly, $1 at a time, every single day. No excuses, no emotions, just discipline. Like and subscribe, the $1 Investor.